We have with us Mr. Vijay Valecha, CIO at Century Financial. Welcome with us, Vijay. How do you explain the drop of the oil price after we have reached the levels of $84 for Brent and $80 for the WTI? We have dropped by more than $4 from those levels, despite the fact that OPEC practically has extended cutting the production till the end of Q2.
Well, there are major factors on oil prices. The demand from China is definitely slowing down. Analysts are now expecting China's GDP growth to be less than 5% also this year, which is a very big blow for oil prices, not just oil, for all commodity prices. Along with that, we actually are seeing that demand across the world is reducing. So that is definitely one of the factors. The OPEC has decided to cut oil output for the next quarter as well, but that is still not a bigger cut than expected. I think if we actually want oil to cross the 85 barrier, the 90 barrier, it has to be deeper cuts by the OPEC plus. Otherwise, oil is pretty much on a downward spiral.
Let us talk a little bit about another commodity, which is gold. Gold, after reaching the levels of $2,200 last week, today it is still dropping. The US CPI were mixed, and also the Fed meeting will be next Wednesday. What do you expect for the gold? Are we going to test once again levels close to 2,200, and in which scenarios?
Well, gold is going completely opposite of all other commodities. I mean, in spite of there being no interest rate decreases, we are seeing oil is making new highs every day. And just the last week move on oil and the continuation of the move this week shows the strength in gold. I really think that gold is poised to even break $2,500 or $2,600 this year. It does look like the consolidation has come in because of $150 move in the last week alone. But it doesn't look like that it's the end of the trend. We did see it come down a little bit today. That's because of a bad CPI data. In spite of a bad CPI data, we didn't experience a $50 fall. We've seen only a $10 fall. That pretty much shows the strength in gold. And as interest rate drop talks begin again in June, I think gold will be making new highs all the time. So we should be looking at the yellow metal as one of the best investments for this year.
At what levels will you buy the dips of gold, Vijay?
I think a dip of anything more than $25 to $30 from the high is a good dip. I think these levels are a good dip for today on a short-term basis. On a long-term basis, I think the breakout itself is a good reason to be long because the upside is much more further away. So for a long-term investor, even these levels are really good to enter.
Do you prefer silver on gold? Many analysts said and believe that silver will have an upward trend journey this year, especially if the central bank starts the rate cut and we have a better situation in the manufacturing sectors globally. To what extent do you believe that also silver will be an investment opportunity in 2024?
I do think that silver also is a good investment opportunity this year. But however, if there's a comparison between gold and silver, the gold-silver ratio also has taken a breakout. I think these are the new gold-silver ratio levels that we are looking at. There were times when the 100 ratio would have been good enough, but now it's not anymore. So definitely as an investment, gold will be the first choice. Silver is not bad at all. We do expect silver to break the 28 barrier this year and probably even 30 barrier this year. But if given a choice of one investment, it would be gold. Silver is not a bad investment either.
Thank you so much, Mr. Vijay Valecha, CIO of Century Financial.
Thank you so much.